Hey everybody, it's your boy Bryan Karp, aka Mailbox Money, with my co-host, the man, the myth, the legend. Video crew, thank you last time giving Anthony all that music. Anthony Loffredo, the professor. And we are so excited today. We have a very, very special guest coming from us straight from Nashville, Tennessee. Anthony, who do we have with us?
We have Drew from MRG Realty Partners. Happy to have you on, Drew.
Thanks for having me, Anthony, Bryan. It's good to be here.
We are so excited to have you, and the listeners are interested to learn a little bit about you. Talk to me. I always like to get everyone's first comic book. How did you get into real estate? And then talk to us how you got into the multifamily space.
Yep. Born and raised in Ohio, went to Ohio State, and I took a real estate class senior year, which really set me onto the industry, got me curious. I always had a love of sales. My dad was in sales, sold Cutco knives at one point, and
You did, or
yeah. Then even though I majored in finance, I kind of knew I was going to end up in sales. Just kind of how my personality works. Super competitive. I was a basketball player, and I moved down to Nashville. Had visited a couple times. Growing city. I like the energy. It was just a chance to meet new people. So I got into wealth management actually right after school, and I bided my time, interviewed with a bunch of brokerages in town. My best friend in Dallas, who's now actually joined our firm in Dallas, kind of helped me along, showed me the ropes, and ended up joining a firm, MRG, that was brand new to Nashville.
Okay.
So it was a chance to help open up the office, and I really fit the mold of a smaller firm coming from a large wealth management firm, and the ability to combine sales with real estate because I'm passionate about financial freedom.
Yeah.
It was really a no-brainer. I need to be on the go at all times, or else I'd drive other people nuts.
So how did you make the transition from being a financial advisor, so it's basically telling people how to invest their capital, to now being a broker and a salesperson selling multifamily to buyers and sellers?
Good question. What's kind of funny, my last year in wealth management, I would sneak out to go to real estate events pretty much the whole year. And I just went to networking event after networking event, built up my network, ended up more so at multifamily events. One, because my friend was in multifamily, and I started building a network of multifamily investors. I think more so than anything, that asset class, it just seemed welcoming. The community was welcoming. And before I knew it, I had learned a lot about the asset class. I like the way multifamily buildings work. And I think compared to commercial assets, I just like the way multifamily kind of builds on itself versus like retail is almost a ticking time bomb with the leases.
Yep.
So it was really a no-brainer to go the multifamily route, and started straight commission with MRG and just started calling multifamily owners.
I think it takes so much discipline because I'm a resi broker, right? You know, me and you have chatted multiple times about it. I'm a resi broker. Resi moves quick, right? Like our closings here in New York, 2 to 3 months, we're rocking and rolling. When you're doing multifamily commercial, like you got to be so disciplined because it's a long game, right? Like these assets take a little while to trade, and there's a lot of tire kicking. Talk to us about that. Like you got to have major discipline or love for the asset class, in my opinion, to go multifamily right from the get-go.
Oh yeah, and people were pretty shocked that I went straight into multifamily, and also the timing of when I started. I started a couple years ago, right when the market was getting pretty tough. So I'm now in eight months without making money. So just testing me, make me grow, and in ways I never could have imagined. And I kind of knew, and my mentor Doug reinforced this, but learning to be successful in this market is going to pay dividends for the rest of my career. Just having that patience and building those habits.
Talk to us about your first deal and what did it feel like after waiting 8 months for that first commission check?
Yeah, great question. This deal, it was a roller coaster, off-market deal, 36 unit in Columbia. I think we've talked about that market, but undersupplied area. Love that market. And the seller is a developer who built the deal, 36 units, 100% occupied, wait list. And I met the seller through my other first listing, and I met the buyer through my second listing. So kind of putting the puzzle pieces together. And that's just kind of how the business works. It just takes time. You build relationships, you meet someone at a networking event, and it's like, boom, you got a deal. But this deal in particular, there was some incorrect information on the rent roll and expenses. So we were very close to losing the deal. Actually, buyer wasn't too happy, seller wasn't too happy. But me and Doug, our principal, were able to get on the phone, make both sides happy, and really save the deal in a tough market. So it was absolutely a roller coaster, and it felt surreal, really, to close that deal, and gave me a lot of confidence.
Drew, you said you had zero, so commission only, correct? Is that the norm for everybody in the industry, or is that just something that's, for your firm itself?
Great question. Not necessarily the norm. We're a smaller boutique firm, so it's more normal on the smaller end. Larger firms, you're seeing, either analyst roles with a salary, or sometimes firms will give you a draw. Like they'll give you $50,000, but then you pay them back out of your first couple of deals. So no, it's not necessarily the norm, but it does exist. And yeah, like I said,
it keeps you hungry, that's for sure, right? Keeps you hunting.
100%. It does.
Drew, tell us about the markets that you're excited about. So we found you totally candidly because Anthony and myself have been deeply purchasing in Western Tennessee. We found that you were listing a lot of stuff in Clarksville and Cookeville. Talk to us about some of the markets, because on a daily basis, I get hit up and people are like, Bryan, what are the markets to invest in? What's hot? What's moving? And I feel like you're really engrossed in a few different markets.
Yeah, I appreciate that. Middle Tennessee is really our focus, and I'm based in Nashville. We sell Nashville deals. A lot of what's trading right now is outside Nashville, like you said. Absolutely love Cookeville. Directly between Knoxville and Nashville. So you have commuters, and then obviously the triangle. So Chattanooga is an hour away as well. That city's growing super fast. It's booming, kind of building its own economy as well. And so the population growth there, a lot of outdoors, parks in that area. So people are moving there from all over. I talked to California people moving there. I talked to investors from all over even looking there now. So love that market. You can get in at a lower basis than Nashville and make some good returns. Clarksville, fastest growing city in the state of Tennessee. You have Austin Peay University. You have the Naval Base, new baseball stadium going. That's a great place to invest. You got to look long term. There's a bit of oversupply in Clarksville and Nashville right now, but the demand is also the highest it's ever been. I think that's a huge focus in my conversations, is like, you have to have a long-term focus. Look at the fundamentals of Tennessee and multifamily, the asset class, instead of, looking right at what's right in front of you. So those are great markets. Columbia, I love. Chattanooga, still kind of a secret nationally. I think it's an unbelievable market. There's only so much more they can build there. And really anywhere within an hour of Nashville, I think, is doing well. You have a lot of spillover.
What is your feeling on Dixon? Have you seen any action in Dixon?
I haven't sold a deal there yet. I am working on a LIHTC deal there. That's a great market. There's no oversupply. People are moving there in droves, and just consistent, stable, kind of different trends than Nashville.
Yeah, we did some research, Drew, into Nashville and all of the applications that are being submitted, which is very few right now for new builds. So it seems right now that there's almost like an oversupply hitting the market in Nashville, especially those A-class buildings. But with the amount of people coming in, right? And the amount, it's going to get absorbed. And then it looks like we're going to come to a point in about 2 to 3 years where it's going to be back to where it was, where there's more of a demand than there is a supply available. Would you agree with that?
100%. And
Yeah.
and Nashville's not going anywhere. It's in the second inning, our principal likes to say. So the tertiary markets are great, but Nashville's going to be Nashville. I think last year, so 12,000 units were delivered and 11,000 were absorbed. I mean, the headlines are only showing the oversupply. They're not showing that demand was the second highest year in history. And new multifamily projects have halted. So I think 2027, maybe late 2026, you're going to see a bounce back in rent growth, occupancy improving. Rent's a little flat right now. Stabilized vacancies at like 6%.
That's what we're hoping, right? We're hoping for that spillover into the secondary markets outside of Nashville.
100%. And every submarket's different. So it's hard to paint a brush on cap rates or vacancy. Like Columbia and Nashville, it's two different markets.
You said to me earlier that you just got back from a conference of limited partners and general partners. Me and Anthony are general partners. We're always, and we spoke about this offline, we're always trying to find deals and raise capital, right? And then keep those going hand in hand. You said there was a lot of negativity in the conference that you went to. Can you let the audience, because they're not inside players like you, what are people negative about? What are people positive about? What are they seeing coming in the future in 25?
Yeah, well overall, I'm seeing a lot of positivity, positive sentiment with a couple rate cuts, Trump in office. Last time Trump was in office, he lit the market on fire with bonus depreciation, decreasing capital gains taxes. I think that's going to return. Obviously markets care a little more about Trump and what's going on than the rate cuts because the 10-year's still been elevated, although it's down a bit, which helps. And there's still some pessimism out there and cautious optimism. I think some of the pessimism was around having the same conversations we've had a year ago. Attendance was down at this conference, and the GPs are hungrier than ever for deals. That is what I noted. But the LPs and everyone's kind of weighing real estate versus other asset classes. I know, money is leaving equities, going to bonds in droves. That's pushing the 10-year down a bit. So I think it's more so just people sick of the same conversations. But overall, sentiment is up. I think people see a light at the end of the tunnel. And I think now's the time to make a move. Armageddon, I don't think is going to come. I think if buyers wait for 2 or 3 green lights, it's going to be too late. And at the same time, I think it's a good time for sellers to make a move because there's a lot of hungry buyers out there.
I love that you said that. If buyers don't get in now, people wait too long, right? Everybody wants it to be perfect and 3 green lights, right? Where sometimes you got to have like one light turning green and you got to jump and you got to be first to the party. What makes you feel like this is going to be a good year to purchase? Because me and Anthony could not agree with you anymore, Drew. We're like, anything that we could underwrite that makes sense, we are literally locking down. We just put 100 deals in contract, almost 100 deals in doors in contract in the last 30 days.
Yeah, I heard. And congrats, by the way, on a couple of your closings. You're in a couple of good markets in Tennessee. So deals are still discounted. Like, you got to buy smartly on the basis that works for the next couple of years until you can refi. But deals are discounted. That's what we're telling buyers. I think now's the best opportunity in a decade to buy. And the distress is not necessarily widespread yet. In the last couple of weeks, we have started to see a couple deals in deep distress that don't even make sense at the loan value, believe it or not. But I think most sellers are not in a bind yet, and a lot can hold, whether it's your mom and pops who aren't chasing a return or, syndicators who are chasing an exit cap. But yeah, I think I think you got to start diving in as a buyer. I'm looking for deals and building broker relationships. Sometimes, the deal may look overpriced at first, but if you engage with the broker, that price will come down and you'll end up getting the deal.
Drew, tell us a little bit about, so you're saying that you really see the mom and pop owners and then the syndicators like us who have a return and have our models and have our systems. Who do you find the easiest way to work with, and how do you work with the mom and pops and then switch to a syndicator?
I don't know if either's necessarily easier. They're way different, as you know. You're a syndicator. The mom and pops, it's kind of fun working with them, especially in some of your tertiary markets that you guys look at. I find they really appreciate you coming out to meet them in person, driving in from Nashville versus someone just calling them on the phone. And they always have, great stories. They love talking about their portfolio, how they built it.
Yeah.
And if you just build that relationship, I find that's kind of my secret weapon, going out meeting in person. And they're fun to work with. They're not necessarily always logical on their price, so you have to educate them a bit. But I've gone out to Cookeville, and boom, I got like 2-3 referrals from a local, so they appreciate that. And then syndicators, it's relationships as well, but they're worried about their investors, so you gotta think from their investors' perspectives, really. And show as a broker that you are like seeing everything from their point of view. A lot of them are buyers as well. So you got to walk that line of, selling your deal, but also looking at everything through a buyer's lens.
How do you, a question I always like to ask is, do you invest in multifamily real estate? Talk us a little bit about what you do on the side, or, are you invested in any multifamilies? Do you have any rentals? Like, is this something that's really your passion?
It is my passion. I'm not invested yet, but I'm serious about pursuing that and serious about financial freedom. I think you need to have some passive income as a broker and just in general. So I am planning a house hack this year, and also, my first step's probably going to be, find a couple operators that I like working with in the next couple years and start rolling my commissions into their deals, because I believe in the deal.
Now, what is the typical class? Do you typically go after class A's, B's, C's, unit count, kind of price range for you and your firm?
Yeah, our firm, MRG, really middle market specialists, B and C, 20 to 150 units. We'll dip our closing into class A. We're a little unique with our size in that we'll meet clients where they're at. We'll work with a client with 25 units, and we'll work with a client with 2,000 units. We try to build accounts that we stay with and do deals with over the long term. But yeah, that's our bread and butter, that range I gave you. And I mean, that's Nashville, that's tertiary markets. I think Tennessee is set up where you can really just focus on Middle Tennessee as a whole.
That's why we love you, Drew, because Anthony and myself's buy box is 25 to 60 units, right? B and C class assets, right? If you look at all of our acquisitions, our 36 unit that we're in contract on, our 51 that we own, we just locked up a 44. That's what we're looking for. And that's what we love. We love like the smaller, nichier brokerages that really build a relationship with their investors and their sellers.
100%. I think that's what the opportunity is. You less competition. You're not competing with some of the larger groups.
How do you analyze a deal? Well, so, all right, I'm a mom and pop investor. You cold call me or you send me a mailer and I want to sell it. How do you put a number on it? And then how do you bring it to us with a number? Like, explain that to me on the broker side so we could understand it.
Great question. So my principal dog, he likes to say there's 3 or 4 ways. You have the income approach, cap rate GRM, cap rate's NOI over market value, GRM's the gross rep multiplier, And that's just, your back of the napkin. So you can take a look at that. And then you have comps, sales comps, whether we pull from CoStar, Crexy, MLS, talk to appraisers, pull up tax records. And then you have appraised value on the tax records. See what that is. That's usually a little lower than what it might be worth. And then cost to replace as well, depending on the deal. I mean, those are the 4 ways you can look at it. And typically, you kind of find a weighted average of those approaches, and that might be what the property's worth. Obviously, you have a shifting market right now. Interest rates are changing every month, so it's hard to underwrite. You have to kind of be on your toes, and it changes every month. And mom and pop owner, they just can't wrap their head around the fact that their property was appraised at XYZ in 2021, and it might not be worth that now. So I get it. They're anchored on that, but our job's to educate them and communicate. And sometimes it works, sometimes it doesn't. There's still a bid-ask spread I see. I am super busy. I have T12s, more T12s hitting my inbox than ever before. But there's still that bid-ask spread with buyers and sellers.
So the mom and pops, they are still thinking about 2021 and 2022 numbers, where you're trying to get them to wrap their head around 25 and what it's trading for.
100%.
Do you find that you're getting a lot of sellers reaching out to you, or you're doing cold prospecting out to them? And what do you find to be some of the best ways of getting in touch with people?
Great question. So I've been in this couple years now. I'm starting, to get people calling me just from that groundwork. It takes time, and I'm still cold calling. You have to be. We're not a 100 call a day firm. That's just not how we work. There's some firms that do that, and they do really well. But we try to be focused on quality in our conversations. Like, how can you be on your toes and maximize like 5 meaningful conversations a day at least? And go for the meeting. The goal of the call is to go for the meeting always. Face to face, that's my only goal. I don't know how you can be successful without that in this business. So it's still calling, and that's not going to go away. And same with the buy side and selling deals. In this market, we spend a lot of money on marketing, but it's really phone work to buyers that is getting deals done. It's not sexy. I send mailers, I send cards, handwritten cards. We have an email blast that shows all our deals, and we get reach outs from that and listings from that. So there's a couple of different ways, but it's really phone work, and I don't think that's going away in the industry.
True. Are there more buyers or sellers right now?
More buyers. It's a seller's market. Definitely more buyers.
How does a buyer, all right, so this is, we get a lot of newer investors listening to us, or new syndicators. How does someone get your attention, and how do they stand out of the sea of emails or cold calls that you get from someone who wants a deal? Like, how do they stand out? How do they get on your short list?
I'm glad you asked. My first thing, I was talking to someone the other day, is like, get on the phone. Get on the phone. That's it. Like, maybe you email, reach out, but if you're not willing to get on the phone, I immediately have to filter you out just from a time management perspective. And I don't know who you are. I don't know if you're real. So get on the phone to talk through a deal. It helps to share your resume and any references, but I'll talk to anybody. And I've done deals with first-time buyers. So that's not a prerequisite, but it helps to start with that, open with that. And so I know, hey, this guy's real. Be ready for questions on, financing, capital. What's your timeline? Like, some people just call me and say they're a buyer, but they're not ready to move for a year. So, you got to communicate that you're ready to move. If you don't have financing lined up, ask me for vendor relationships, property managers, boots on the ground. So it's pretty easy to filter for me, through buyers, and it's people that respect your time. You and Anthony got my attention really quickly. You had your YouTube video page, and you guys sent in an aggressive offer right off the bat. So I was just like, these guys are real. They mean business. And yeah.
We still love that deal. If it comes back around, I am on the first airplane, and I'm gonna stay with. I'm gonna house hack with you. Let's get a little personal. Are you married? Do you have any kids? Just so everyone can know a little bit about you.
Yeah, I'm single. I'm 25, and I'm enjoying being single for now, focusing on career, but definitely intend on getting married and having kids.
That's fabulous, Drew. I could tell you that you said something that I wanted to focus on to Anthony before. We just did a joint venture, and we have a co-GP in one of our acquisitions, our newest 36 unit, and we're partnering with the broker and the property management team that got us that deal. So we are so open to that. You find an acquisition that makes sense, we would love to have you be a part of the general partner side.
I love that. That's a note.
Yeah, that'll get your foot in the door. You'll see how we operate on this side of the aisle, and you'll be an equity owner in the building, and you'll learn a lot too.
100%. I think that's valuable. As a broker, being able to learn from guys like you, and then tax advantages of rolling my commissions.
Oh, without a doubt. On our first acquisition, our 51 unit project, they just signed the tax return on it. I wouldn't even want to say it was 120 days. In 90 days of ownership, we pulled out $503,000 or $530,000. We took a $530,000 loss in the first 90 days of our asset.
Wow.
Yeah, we did a cost segregation study. And to your point that you mentioned earlier, the bonus depreciation is likely going to be coming back in full strength. So that'll be good for 2025.
Yeah, this fall, I'm telling all owners to talk to their CPAs and start figuring things out.
Drew, I'm trying to understand. So you said there's 4 different ways of valuating a property to somebody, but I guess I'm trying to understand because Anthony's going to tell me there's only one way, which is the revenue that the property is bringing in against the expenses. So how does that work where I'm a seller and I'm like, well, X, Y, and Z got 110 a door. Why can't I get that? And what's the conversation going back to them with that?
Well, you're right. It always is going to go back to the income. The other methods are just frames of reference. If you go to a comp, then it's going to be like, okay, what was that comp's income? What was the rent? So it always goes back to the income. It's a numbers game. There's no emotions involved. So yeah, it's going to go back to the income, and it starts with cap rate. That's more your back of the napkin, but we really try to get off the cap rate conversation, because me as a broker, I could show you any cap rate. Maybe the seller self-manages.
Yep.
Maybe they're handling expenses differently. And so it comes down to the business plan, levered cash flow, and how you're going to operate the property. A buyer could operate it totally different than the seller. We had a deal in another office where the buyer came in and bought it at a 3 cap because he knew he could take expenses down 40%. So cap rate doesn't tell the whole story as a buyer, so you need to be careful of that when you're underwriting a deal.
Give us an example. How is he able to, because that's what me and Anthony look at, right? We're value add investors. So the thing that we try to do is raise income and lower expenses. So give me some ideas of what people are doing to lower expenses and raise income.
Raise income. So there's many ways besides just bumping the rents, making sure rents are up to market. I mean, you can renovate your units, appliances, new flooring, washer dryer connections, dishwasher, and you can get a rent premium for that. You have to look at the comps, talk to property managers in your market, and see what's standard, see what renters are willing to pay right now for those different amenities, and even things as simple as like toilets. New toilets, renters are willing to pay $30 more. Multiply that out by 12 months, 30 units, and that's significant. So then some renovations are worth the money spent and some aren't. So you got to measure that ROI. For instance, if we have a seller who wants to sell in 5 or 6 months and they're thinking, hey, I should, update everything, update the kitchen, it may not make sense. Based on what the market's showing, they may spend X dollars on the kitchen, but they're only raising rents, X dollars, and it's not helping the price enough. So talk to your broker, talk to property managers on that. And then there's other amenities you can add depending on the building, pickleball court, dog park, things outside the building. But once again, in the B and C class, you just have to be careful. It's not necessarily worth it to have those amenities. On the expense side, you can usually tighten everything up. It starts with having the best property manager possible who's going to treat the asset and your money like it's their own. Where are they going for supplies? How is the property manager compensated? Are they rewarded and given incentives? So that can really take things down. Insurance, get an insurance quote from a great group. Taxes, usually not much you can do there, although you can appeal taxes. I've seen owners, appeal taxes and get taxes down this year based on assessments. So there's other ways to get the expenses down.
On our new, tell me what your thought is, because Anthony's now sold me on what to do, but I won't give you the secret. He on our newest 36 unit that we're in contract, it had a pool. So me in my head, I'm like, oh, this is great. Let's get this thing back up and running. These people are going to pay a premium for the pool. What would your thought be on a pool in a tertiary market?
That's a great question. And you're talking Dyersburg?
I am talking Dyersburg. That's where that's where our 36 unit that we're in contract. And let me paint the picture. It's 9 brick buildings. They're all 2-bedroom, 1 full, 1 half bath. The second floor units have fireplaces, vaulted ceilings. Like, it's a sexy property. It definitely, we're budgeting $600 to $700 in reno, and a lot of it in exterior. But some of the rents already in the units are getting $1,100, right? So we have good rents. A lot of them are at 8 and 9 that we're going to have to push up. So there's a pool. It was open last season. It's not like a pool you'll see in an A-class building, but it's got a pool. So we've been back end dialoguing back and forth. Should we keep it open? Is it worth it? So I'm just curious your opinion.
Well, I'm a rampant experimenter. So if I were you, I would experiment. I'm not a Dyersburg expert, but off the top of my head, I'd say, hey, this could work. This could bring in renters. I don't know if other apartments have pools, and they may be willing to pay that premium. But then you have to think about the cost of pool maintenance and also the liability. I just sold a 49 unit and the owner got rid of his pool 10 years ago for liability reasons. Also, B- C+ building. So his thought was it wasn't worth it to have that pool. But I think it's worth experimenting, see what happens. You easily stand out in Dyersburg with that pool. So you never know. And I don't know if it's a turnkey pool in good shape, but I like pools. So
Me too. I love pools too. Ant is very analytical and very numbers. And he's like, dude, because I think about myself at 18 years old, I would be hopping that fence, hanging out in the pool if I didn't live there. So right now we're leaning towards closing it. I was all keep it open and I'll hang out there and sunbathe when I'm in Dyersburg. But Ant made some really good points that we should probably just close it. We could use that space for the dumpsters. We can cage it in and then give more parking to our tenants.
Yeah, well, that might not be a bad move. There's a lot of pools on properties that just sit untouched. So
this pool also is like, it's like a big ass puddle wrapped in plastic kind of pool, and it's not in good shape. And there are, from the previous owners, the pool closes at whatever time, 7, 8 o'clock at night. And they have gone to the property at 10 at night, and there's been 20 people piled into this pool, drinking and smoking. And, to me, it's, you fill that thing in, you move the dumpsters. One of the big problems in there is people complain about parking. So we have an ability to open up a few extra spots if we move the dumpsters and stuff. So, and again, with the liability and the insurance, and if it was a big nice pool, it would be totally different. But it's just like it's just like a shitty circular pool. So
Yeah, I hear you. There's other ways, to create a community so people want to stay in your building. Retention, like have cookouts, pay X dollars and buy hamburgers. Pickleball court. I don't think it's too expensive, and once people get to know their neighboring tenants, they'll want to stay.
Something we just did in our 51 unit was we had our property management group print out a flyer and put it on everyone's door and said, please refer a friend and we'll give you a $50 rent credit. And it was funny because it cost us basically whatever the printer paper was and 2 hours of one of the women who work at the property management company to put it out. But we got 5 or 10 people who introduced us to friends of them, especially now that we're taking over the development and we're trying to build a relationship with our tenants.
That's great. That's great. Yeah, that's a home run.
yeah, another thing we're doing too over at the 51 unit is putting on flyers on doors similar, but asking if they'd be interested in storage space, because there's room on the property to add some storage units that they might potentially want to, bikes, Christmas decorations, that kind of stuff that they would pay $30-$40 a month for a little storage unit.
Storage is great. I see, I've looked at a couple apartment buildings in the last year, and the storage helped the deal tremendously.
Drew, what are some of the other things you've seen people do for value add to a complex? Like, is there anything maybe me and Anthony haven't thought about or haven't hit?
Let me think about that. Allowing pets, that's an easy one. I think everyone should do that. It obviously there's 2 levers to pull, increase income, decrease expenses. So I think I covered most of them. Really, it's renovations, but targeted renovations that you're going to have an ROI on.
Yep.
That they're going to pay for in that market, and it's different market to market.
Okay, awesome. Give us, we're almost out of time now. Give us, I always like to ask your craziest real estate story, the craziest deal you've ever had, or the craziest thing you've ever walked in when you walked into show a unit. Let's end with that. And I just really appreciate your time.
Yeah. That's a great question. I'll tell you one kind of funny story is, I sold a building in Cookeville, 18 unit.
You said Cookeville?
Cookeville.
Cookeville. You love Cookeville.
Yeah. I sold a building out there. It was actually under contract 3 different times, with 3 different buyers. Finally sold, but first time I was under contract. I had buyers flying in from Boston, and property manager, he's not going to hear this, but he didn't do a great job for the most part. Great guy, but he wasn't going above and beyond taking care of the property. And a blizzard hit Nashville like that very week. Super icy. Nashville shuts down when that stuff happens.
Yeah, 2 inches of snow. You guys don't know what you're doing.
Yeah. So, meanwhile, the blizzard comes. I think it's the weekend. Buyers are flying in Sunday, and this blizzard hits Nashville. And I'm freaking out because the property manager, hadn't been out to the property in a week. And I know it looks terrible. It looks like shit. There's trash everywhere. So I drove out that Saturday in the blizzard, almost got in like 2 wrecks. And then I go to the property, Eagles Bend, and I picked up trash for an hour in the snow and cleaned it up. So that was crazy. And then the buyers came in, and it turned out they didn't want the property anyways. But just kind of looking back was amusing to me.
Yeah, whatever you got to do to get a deal done. Just what did that trade for a door?
$111 a door, owner financed, which a lot of deals are getting done via owner financing assumptions, 1031s right now.
Okay, that's awesome. We definitely got to look into that. We haven't been able to grab any owner financing deals
Yeah.
on that end. What are you seeing on the rate side for Fannie and Freddie? What are you seeing on the rate side?
I just got a great debt quote in at 5.6. That's a bit of a larger building, but and that was even before the 10-year drop this week. It's back up a little. So you can get agency in the fives right now.
Okay.
Agency is what makes most sense. Obviously, building has to be stabilized, and agency has some more restrictions, higher costs, higher prepay. But agency is what makes sense with rates right now.
Awesome. Listen, you are a gentleman. Thank you so much for sitting with us. Where can people find you? What's the best way in getting in touch with you? Email, cell phone, what social media are you on? And how do we stay in touch with everything going on with you guys?
Yeah, no, I appreciate you both tremendously. And so my cell phone is 615-522-3973. Anyone can call me, text me. Email is drew@mrgrealtypartners.com. If I don't answer right away, I promise I will get back to you. LinkedIn, I'm very active. I post a lot, so please engage with me there. It's just my name, Drew Lekowski. And X, formerly known as Twitter, is Lekowski Drew.
Awesome. Drew, thank you so much. Let's see if we can get a deal together in 2025. We are hungry and we got our capital ready. We're just looking for a deal, and we'd love to maybe JV with you in the future.